So you live in Canada. Where again do you live?
I live in Toronto, Canada. Okay. So I'm in the New York time zone, Eastern.
Okay. Well, let's open it up to question and answers. Okay, Eric started. Can you see it?
Let's see, I haven't seen the full question. Do I focus on it? Do I focus on any particular currencies? No, I scan I scan the every pairing of the 8 majors. Although I will say that last year the yen was devaluing slowly and steadily throughout, particularly the latter part of the year. So last year, a great many of my trades were yen trades, but that's simply because those charts were trending and patterning frequently. Particular time frame, almost all of my trades are either in the 5-minute or the 1-minute charts, and I think that's simply because I like to see the story unfold rapidly. Once I'm entered into a trade, I simply like it if the story unfolds before me rapidly. So I think that's the main reason why I like the 5-minute and the 1-minute. Also, on those shorter time frame charts, there's a way to think of it that opportunity unfolds more rapidly. I've come to think of 90 bars as sort of being a time period where you could get, say, a 30-bar momentum move followed by a 60-bar consolidation. So I sort of think of 90 bars as sort of being a fresh environment that a new setup may arise. Well, in the 1-minute chart, 90 bars turns over every hour and a half. But on the daily chart, it takes 3 months to get a fresh 90 bars. So I think I've gravitated to the 1- and 5-minute charts, both because I like to see the story unfold quickly and because I may scan several times a day. If my scans are an hour and a half apart, the 1-minute charts are absolutely fresh during that 90 minutes. So that is my time frame preference. Are you more likely to make trading mistakes on the shorter time frame? In some sense, yes. When I, especially early on, I would get caught by chasing, like especially for an S2, hopefully your pennant shaped bouncing ball forms along the flat line, and then when it breaks, that can happen quickly without much warning. Say you've had 50 bars, the pattern has formed nicely. Well, it may trigger on the 51st bar, or it may not trigger till the 80th bar. But when it happens suddenly, and that it happens more suddenly on the shorter time frame charts. So early on, I did get, I allowed myself to be rushed by that. And if I was scanning and I came to see the chart newly, and I'm seeing this, whoa, look at that, in the 1 minute, the consolidation formed, and look, it's just broken. Oh, I better get out of this right away or I'll miss it. And not do a complete analysis. and not notice that TC2 is overextended from the EMAs. So yes, there is perhaps a greater risk of making errors in the short time frame, or I've just told you an error that I did make. And so I'm now trying to train myself to almost have a rule that I have to put in an advance order to enter the trade, because that slows me down. If it means I'm not jumping on something that is either I'm already late, and if I'm already late, what I really should do is just accept that and keep scanning for the next opportunity, or that I'm allowing myself to be rushed and I haven't done my complete analysis of every factor in all three relevant time frames. So I'm moving now to imposing a rule on myself that my entry should be by advance order, because that means I've completed the analysis and I'm not chasing if I'm putting in an advance order. Is there a certain time of day that you dedicate to trading? I'm in the New York time frame, and I prefer to trade in the mornings, and that's simply because I feel that I'm sharper earlier in the day when I'm fresh from sleep, and also because I trade in the 1 and the 5 minute, 5 p.m. New York is an important time for me, because the spreads widen, sometimes quite remarkably wide, at 5 p.m., which may not matter if you're in a 15-minute or a 1 hour chart, but in the 1 and 5 minute, that spread widening is very significant. So I try to finish entering by noon, just to give myself time that a 1 or 5 minute trade that I've entered today will have matured and not still be in the early period where it may not have hit 1.2 and become a break-even trade. I don't like to have a trade in that condition in the 1 and 5 minute as we hit 5 p.m. New York, because of the spread widening. What's my preparation routine to get into the right mindset? I will say that I'm still working on finding a best way of preparing, but it certainly includes meditation and reminding myself to be patient. When I first started, I had a very strong impulse to be active. That I came into it with a strong desire that I really wanted to find and enter a trade today, and probably multiple trades today. I had a strong desire to do that. And the effect of that would be that I would undervalue quality considerations which argued against taking this setup. So I would enter more low quality trades than was a good idea. And so I'm moving towards having part of my preparation routine to remind myself of the value of patience. And I don't know whether you've yet heard Gabriel express the idea, 1 good trade per week is all you need. And so part of my mental preparation is to state of mind where I'm fully accepting that I may take no trade today at all. and to carry with that a concern not only that the setup be legal according to the rules, but that it also have high quality features, and in particular that it not have some pronounced low quality features. One of the low quality features that I've become sensitive to through painful experience is if, say for an S2 long, and here's my flat line. So I've got bounce, bounce, bounce. I used to, you may have your last bounce and then it comes away from the line and then moves rapidly with momentum to and through the line. And I used to often react to that, oh boy, look at this. It's moving through the trigger point with a lot of momentum. This is great. And I would jump on those and have generally poor results, because what I've learned to see is that a bounce and then move with momentum is violating one of the quality considerations, which is end of line compression. Much better than the thing I just described, which I call a swooper. Say it bounces off, creates white space, and then breaks through to trigger in one swoop so that there's white space immediately before trigger. I've learned that that's actually an important low quality consideration. Compression immediately prior to trigger, especially like, the last 5 or 6 bars, if they are in contact with the flat line before trigger, that's much better than one that is swooping to and through the trigger point from white space. Do you have a preference for long or short? No, I have no preference for long or short. Last year, more of my trades were long than short, but that was simply because yen was weakening generally, so a great number of my trades were yen trades, and with yen weakness, the way the pairs are set up, the yen is always the second component of the pairs, so that a yen weakness trade is a long trade. But no, one of the things I like very much about Gabriel's Forex systems is that short and long are equal. I have no preference between them. I find it easier to see long at the moment. Yes, I had the same experience. In part because we have this cultural training that up is good. Yes, I found it easier to see the long patterns at first, and it is a little bit of an eyeball training to see the short patterns, but I have managed to do that, and so currently I have no preference between short or long. What was the most challenging aspect of developing your FX trading skills? Well, for me personally, it was how low my computer skills were coming into this, and that every aspect of it involves computing skills. So for me personally, it was that, and to an extent it remains that. But I would also say more generally, sort of the mental habit of accepting the patterns are not predictive. And it's not true that if a pattern forms and follows all the rules and has some good quality features, that does not mean it should go your way. That the edge that the patterns give you is an edge of probability. The probability of it following through in this direction is higher than the probability of it drifting or moving against you. But all three of those possibilities remain in play, and the more and if you take a substantial number of trades, you will see all of those. So developing the skill of accepting the edge I'm getting is a probability, not a prediction. And it's not true that just because the patterns don't tell you anything about what this one trade is going to do. The patterns tell you that over 20 or 50 trials, you will come out ahead playing these patterns, but those 20 or 50 trials are going to involve a mixture of trades that go your way, trades that drift indifferently, and trades that move against you. And there's no way of telling when each of those three possibilities is going to come up. So training my mind and my emotions to accept that fact, which means bringing sort of an indifference to each individual trade. I analyze the trade to the best of my abilities, look at the setup components and the quality considerations, and decide whether this pattern shows enough quality elements to make it worth my while to put an R at risk in the probabilistic sense, while accepting the high quality setup is not predictive. It doesn't mean this one trade right now should go my way. That was a mental and emotional adjustment for me. Trying to beat FOMO tendency. Yes, that's right. Do you morph your trades from the 1 and 5 minute time frames between swing trades? Yes, when the conditions are favorable to that. So morphing to swing trades, that under the rules that will only happen after hitting 4R. So when a trade goes well and does hit 4R, now you're at a decision point whether to continue with the standard exit algorithm rules of where you'll be at a 75% stop there, or whether to go with the swing trade. And I take that decision individually each time. And what determines that is basically, how do the higher time frames look? Are many of the higher time frames in alignment, all trending trade-wise? That basically is the condition that makes the risk of swing trading worthwhile, because swing trading is a risk in the sense that typically the swing trade rules will back the stop off quite far, so that if price now drops from 4R, your swing trade stop may be all the way back to, say, 1R. And if it falls, that's an emotional disappointment to have had 4R, to be hoping for maybe significantly more. And if you're under the standard rules, your 75% stop is at 3R. And so if you get taken out there, oh, well, it rose to 4R and I bagged 3R. I feel pretty good about that. But if I swing trade and it fails, oh, I had 4R and now I've only got 1R. That's a disappointment, which is why the swing trade rules involve taking a quarter up at 4, because that adds 1R to your bag, so that if you do fall off, that 1 R in the bag sort of cushions that emotional disappointment. But on the other side, you're backing off the stop because you're saying, wow, look at this higher time frame alignment. My 15, 60, 4-hour, daily, and weekly are all trending trade-wise. I think this gives me a high probability that this trade has not only hit 4, but it's going to keep going. So I'm willing to put the risk of backing off the stop to give it more breathing room. If it's going to serpentine its way up, the serpentines down may take out my 75% stop, but I'd still be alive on the backed off swing stop, and this will you never know which way it's going to go. So yes, I do swing trade, and what is the condition that would make me choose swing trade is the higher time frame alignment. And just to give you a contrast of me deciding the other way, in November, I had a pyramid trade in the US dollar yen, and the trade was moving quite strongly. But this was in the time when the Bank of Japan had already intervened to knock the yen down, and now it was climbing back up again. So I caught a series of 1-minute trades of a pyramid rising up, but we were now above 150, and the Bank of Japan's first intervention had been to keep it below 150. So I knew that I was at risk of the Bank of Japan intervening again. So on that day, when I hit 4R on, I guess it would be 3 positions hit 4R, I very deliberately did not swing trade that because I was expecting an intervention to knock it down quickly. So I stayed with the standard algorithm because I wanted to bag the 3 out of 4, that ratio. And that is in fact what happened. I started my trade at 4 a.m. my time, and the Bank of Japan did intervene at 8 a.m. and it dropped like a stone, took out all my positions, but I got a nice profit out of it because expecting that intervention, I had kept the standard algorithm and had not been tempted to back the stops off in the way that the swing trade stop does. Did the CPI affect your trading today, and how many trades did you take by 12 p.m. today, and where do you see opportunities? I have not traded today nor looked at the charts. I had family matters to attend to this morning, so I cannot answer your question because I haven't been watching the charts today. Do you have more examples of high quality trades? Right. So I've told you that I've learned that a quality of what seems to me to be one of the very important and rewarding quality features is what Gabriel calls end of pattern compression. That there just seems to be higher probability of good return on trades where quite several of the bars prior to trigger are in contact with the flat line. So you're getting compression, sort of in 2 senses of compression. One is contact with the flat line, but also low volatility, that the pattern is goes into a period of low volatility, small bars. The final bars are small bars, each of which are in contact with the flat line. That is a very high quality feature of a pattern. Another high quality feature is what I will call the bouncing ball. You know how if you have a rubber ball and you just throw it, it does this pattern of the first drop, and then the next bounce is about half that height, and then the next bounce is about half that height, and about half that height, and then at the end it starts to roll on the floor. A pattern, whether if this is a long S1, boing, 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 boo-doo-doo-doo-doo, and then the breakout bar. Or S2, and let's do it short because it will then be the same thing. An S2 short, boing, 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 doo-doo, and then the trigger. That, if that's a much higher quality than S2 short, a little bounce, a bigger bounce, a little bounce, a high bounce, and now we trigger. That sort of mishmash of bounce sizes and not forming a pennant. The bouncing ball then forms the pennant shape across the line across the highs, the descending highs forms a pennant shape. But also beyond that, if you get this really nice bouncing ball pattern, that is a high quality characteristic, in my experience. Do you tend to do more S2, S1, or S3 trades? My eye sees S2 very readily. So the majority of my trades are S2s just because they jump out at my eye. I'm training myself to see S1 more often than I have because I know I've missed them just because I didn't see them. One tip Gabriel gave me, which has been very helpful to me, is he suggested that I do because I have this thing where I see S2 very readily, not so much S1. He's advised me to do a separate scan with only S1 in mind. And that has been helpful for me to catch both of them. I do very little trading of S3 simply because I haven't tackled training my eye to it. I think also because it shows up less often. The market conditions that will produce S2s will also produce S1s, so they tend to come together. S3 is its own different market condition, which actually arrives less often. So I've been kept busy by S1 and S2, and I haven't yet concentrated on S3. What does your trading journal look like? Too often incomplete. I strongly advise you to complete your trade journals. My insufficient and incomplete tendency is I'm very disciplined about taking the screenshots right away. You have to take the screenshots right away. Where my own personal process can use improvement is in I take handwritten notes because I'm not quick on the keyboard. My scanning notes and my trade evaluation notes, my decision to enter, even my calculation of the 1.2 and 0.4 levels is all pen and paper. And I have the poor habit of being slow to translate those into keyboarding them into the document. But another thing that I should be doing and strongly recommend that you do is complete your trade journal as you go, and then use it as a tool for daily review. Because if at the end of your trading day, if your trade journal is already complete, now you have an excellent opportunity that you've ended trading for the day for whatever reason, your own schedule or what have you. So now your mind is out of the state of mind you're in when you're scanning the charts for opportunities and considering entries or managing your stops. You're in a more relaxed frame of mind, a more objective frame of mind. You're not in the hunt. To now look back on your trades as you see them in the journal, you can get a second view of them from a more objective frame of mind, and you can learn things and accelerate your learning by taking a second look at your trades after you're out of hunting mode. And you can catch mistakes, you can catch omissions. Oh, look at that. I entered that trade even though the 200 was right at price action in TC2. I hadn't noticed that in my excitement over the pattern, but I see it now, and that would explain why that trade didn't follow through. That is a very useful learning, and your trade journals can give you that opportunity for that learning, and your second look back can be from a more objective frame of mind than you were in at the moment that you hunted, entered, and pursued the trade. Can you talk about the mistake that you made a lot, and how did you change, improve to come out of that cycle? Well, so one mistake I made a lot was being seduced by this thing where a S2 long bump, and then after white space is created, now a rapid move in trade direction happens, which goes right through the flat. I was initially caught by that by going, oh, look, strong momentum in trade direction. Wow, it's going like a rocket. It's going to keep going forever. And I would jump on that and also allow it to rush me, because that is happening fast, especially in the 1 or 5 minute. And I was not noticing that shape is absent end of pattern compression. And I was seduced into thinking that rapid momentum through the trigger point was a positive, whereas for these systems, actually the opposite. Slow, low volatility compression in the several bars prior to trigger is actually a higher quality. After 2 years since taking the training, how is your error rate? Do you measure? I make a great many errors, and incomplete record keeping is one of them, which has a consequence of my ability to do post-analysis, end of week analysis, end of month analysis, is lesser than people who are better at record keeping than I have. So my tracking of my tendencies and performances and errors is not as sharp and specific and numeric as would be beneficial. And I recommend that you do so. Sounds as though you follow the fundamentals as well as price action. What do you track? I'm not really sure what Rick means by fundamentals. I just look for patterns that fulfill the rules and have the quality considerations that that Gabriel lists. I have very little general trading knowledge. I trade only on the basis of what Gabriel has taught me because I don't know anything else. So I'm not really sure what fundamentals are, but I just basically look for the patterns as Gabriel has defined them, paying attention to both the rules and the quality considerations. Are you more a visual kinesthetic or audio type personality? I'm pretty sure that I'm visual because just generally, even if I'm thinking about abstract intellectual concepts, if I can find a metaphor to represent it, and the metaphor is visual in nature, I find that very powerful, and I latch on to that, and I can say that in the little bit of general research about investing that I did before latching on to VTI, and just for those of you who may not know, I'm particularly interested in psycho-spiritual growth, and what attracted me about the Van Tharp Institute as compared to the dozens or hundreds of other trading schools you can find on the internet is their emphasis on psychology and spiritual development. I've taken all the psycho-spiritual courses that Van Tharp offers, but Gabriel's courses are the only technical trading course that I've ever taken. But I recall one time encountering Warren Buffett's advice: learn every detail about every stock. Start with the A's, for fundamental analysis for stock trading. And when I heard that, I said, screw that. I ain't doing that. I'm not going to ruin my life that way. And what I like about Gabriel's systems is that they are visual, that I'm just looking for a shape. And on the initial scan, I'm just looking for a hockey stick. Is a hockey stick present or absent? And it's really easy for my eye to see, well, that's not a hockey stick, and that's not a hockey stick, but that's a hockey stick. And it takes me literally 1 second to look at a chart and see whether a hockey stick is present. And that then becomes my short list of pairs to now look at more closely and see, does this hockey stick conform to the rules? What about the EMAs in TC1 to 2? And how does it fit within the quality considerations? So is this a high quality hockey stick that is worth putting an R at risk over? But I would much rather do that quick visual process with a fairly small number of rules and quality considerations rather than spend my entire life learning every detail of every stock. I also don't like the whole Enron thing. Forex is less subject to being Enroned than the stock market. As a fellow retiring lawyer, anything jumps out at you about testing versus practicing law? Not sure about testing specifically, testing as a subset of the trading activity, but in general, trading remarkably different than practicing law, and in important ways that it has taken me quite a bit of time to really wrap my my head and my heart around. And one of them is this probabilistic thinking that I referred to earlier. And in law, you're trying to be right. And you're trying to convince other people that you're right. Wanting to be right is deadly in trading. Because you'll want to be right about this one trade, the one you're taking now, and that doesn't work. If you want to be right about this one trade, then prepare yourself to absorb a string of losses. Because that's not, these systems work very well, but they don't work by you being right about this one trade. They work by you recognizing circumstances in the chart that will give you a higher probability over the long term, over a high number of trials. But to see the charts clearly, objectively, you have to be not caught up in the subjective energy of wanting to be right this time. And practicing law is an awful lot about being right. So that's something about a lawyer's experience that has to be let go of and adopt this different thing of accepting not only am I not right, not only am I not trying to be right, but I actually have no idea what's going to happen. I've analyzed this pattern. I've analyzed the higher time frames. I've decided it's a good enough quality for me to put 1R at risk, and I have no idea what's going to happen. And the more I can accept and be at peace with having no idea what's going to happen, the more accurately I'll see the pattern and the more accurate my assessment will be. If I want it to be a winner, I will lay excessive weight on its positive qualities, and I will underweight its negative qualities, which will lower net performance over multiple trials. Okay, Rick. Japanese bank holding the yen at a particular levels and anticipating their market action. Okay, Rick has clarified what he meant earlier by fundamentals. That because I was trading the yen so often, and because the Bank of Japan's intervention was historically remarkable. Like, don't think that I spend a lot of time on fundamental analysis, but the Bank of Japan's intervention in the fall of 2022 was historically remarkable. It was like the first time they'd done it in 30 years or something. It was big news. And also its effect on the chart, like, when they came in heavy. It just dropped like a stone. So I was simply paying attention to the fact, you could just interpret this as chart reading, okay, so a month later, I'm trading the yen again, and just look at the daily chart. 30 bars ago, the thing dropped like a stone when it had approached 150. And then it recovered that quite quickly and then it bounced along underneath 150 for a couple of weeks. And I was actually watching and waiting for it to break above 150, because either by being aware of what the Bank of Japan had done or by just looking at the daily chart, you could tell 150 was a line in the sand. And so I'm watching this for weeks. And then comes the day when it breaks above 150. The bank let it go above 50, and the traders pushed it above 150. And patterns started forming in the 1 minute. Well, I'd been watching and waiting for this for 3 weeks, and it happened. So I got in. But I also, either by just remembering that I knew the Bank of Japan had done this once, so they may be likely to do it again, or just look at the chart. This is a chart which in the last 30 daily bars had shown the possibility of dropping suddenly like a stone. So I don't think that I spend much attention on fundamentals at all, because basically I don't understand them. But the Bank of Japan's intervention was so historically prominent, and it was in my favorite, the currency that I'd done the most trades on, and it was prominent in the chart, so I paid attention. At what point did you have a big aha moment when you got it? That is an ongoing process. There's lots of ahas to have, and that's an ongoing process. But I guess for S2, maybe an aha moment was when I had the idea, oh, it's a glass ceiling. That's too long. There's a rising motion which hits a glass ceiling and bumps along the glass ceiling until the point that it breaks the glass ceiling. I think perhaps when I attached that idea of glass ceiling to S2 is perhaps when I started seeing them more readily. Jose, trading, not testing. I hope that has been answered. How do you think one's psycho-spiritual mental makeup helps in trading? It's mostly down to awareness. If one cares about psychological development or spiritual evolution, fundamentally both of those things are about self-awareness. And then absent self-awareness, trading can become a semi-conscious exercise in being caught by fight or flight emotional reactivity. And you can develop a tunnel vision based on fight or flight reactivity, which will distort your perception of the charts and lead to decisions being made motivated by reactivity of either fear or greed, rather than by a calm, cool, objective assessment of the visual patterns displayed by this chart right now. And so self-awareness which is cultivated by caring about psychological development and spiritual evolution, will help you become aware of these tendencies to get caught by the fight or flight response, and by becoming aware of them, allow you to take action to temper them, and for one thing, to walk away from the trading desk when I catch myself caught up in emotional reactivity, and get myself back down into an objective state, including, as I've mentioned before, the attitude of accepting that I don't know what this one trade is going to do. No matter how good the pattern is, I still don't know what it's going to do, and to get myself to not want this one trade to be a winner, but instead want myself to perform well in evaluating the setup objectively, and have that be what I want, that I perform well in objective assessment, rather than wanting that this one trade be a winner. And yes, Canadians do have an advantage in seeing hockey sticks. And if anyone else had a question, either chat-wise or verbally, I'd entertain it.
Okay. Maybe a last question. Well, there was one question that went through from Mike. What was the most challenging aspect of developing your Forex trading skills?
David, it looks like you're on mute.
For me personally, it's been basic in general computer skills. You know, that for my own personal situation, that has in fact been the main hindrance. But also this thing that I've mentioned about probabilistic thinking. And it's natural to want to pick winning trades. And it's natural, once you've entered a trade, to want for it to be a winner. But that's not the most conducive state of mind for the important thing is your assessment leading up to the decision to enter. And you can do that best in a cool, calm, collected, objective frame of mind. And wanting a winner can literally distort your perception, typically by leading you to see and overemphasize the positive elements and to not see or de-emphasize the negative elements. So even though it is perfectly natural to want a winner, the further you can go to tamping down that desire and accepting, this exercise is probabilistic, not deterministic. By deterministic, I mean you're focused on this one trial and a misunderstanding that these patterns are deterministic in the sense that they guarantee or should guarantee a positive result. That's not the nature of the edge. The nature of the edge is probabilistic, not deterministic, and that goes along with the emotional orientation of want that you assess well objectively instead of wanting this one to be a winner. Because that's out of harmony with the actual nature of the edge that these systems give.
Okay, thank you. I think these were great ending words. Words of wisdom, not the only ones here. Okay. Well, thanks a lot, David. That's very good.
And I wish you all the greatest success on your journey. And
David is welcome to join us tomorrow or stay here, so we might see him around.
Great.
You've got very good feedback, David, so thanks a lot from everybody.
My pleasure.
Okay, thank you.